Earlier this month, China welcomed delegations from Australia and New Zealand for separate rounds of bilateral talks. Australian Prime Minister Malcolm Turnbull made his first visit to Beijing and Shanghai with a delegation of 1,000 business leaders. During the two-day trip, Turnbull met with Chinese Premier Li Keqiang and President Xi Jinping, hoping to capitalize on China's transition from an export-based economy to one that's consumer-driven. China and Australia sealed a free trade agreement in 2014, creating more opportunities for trade and engagement between the two countries. China is Australia's largest trading partner. New Zealand Prime Minister John Key also received a warm welcome from Chinese Premier Li Keqiang and President Xi Jinping in Beijing. This was the sixth visit for Key, who is working to negotiate a better free trade agreement with China's leadership. New Zealand was the first country in the Organisation for Economic Cooperation and Development to sign a free trade agreement with China in 2008. China became New Zealand's largest export market in 2014. The two sides signed 5 cooperation agreements in areas including agriculture, finance and education. Joining us now from Sydney is James Lawrenson. He's the Deputy Director of the Australia-China Relations Institute at the University of Technology. From Beijing, we're joined by Victor Gao. He's a Chinese international relations expert. With us from Wellington in New Zealand is Tony Brown. He served as the New Zealand ambassador to China from 2004 to 2009 and was part of the delegation that just visited Beijing. And here with us in our Washington, D.C. studio is Saurabh Gupta. He's a senior fellow at the Institute for China-America Relations. Thanks to all of you for joining us. James, let's start with this trade relationship between Australia and China. As we've been reporting, 1/3 of Australian exports go to China. That's a pretty big market for the Australians. But with the Chinese economy now slowing down, is there a risk that there could be a drop in demand for Australian goods and services? And how would that impact Australia?
Yeah, so that's been the big fear over the last 5 years as China's economy transitions towards consumer and services-based growth. What's that going to mean for China's demand for our iron ore? Well, we have the answer, and the news is pretty good. Over the last 5 years, the iron ore price has collapsed. It's now a quarter of what it was in 2011, but Australia is actually exporting $20 billion more of goods to China each year and $5 billion more of services each year. So China's economy is diversifying. And we're seeing new areas of Chinese demand for Australian goods and services, agribusiness products, tourism, international education, all these sorts of things are actually booming in Australia because of Chinese demand.
Victor, the Australian Prime Minister brought with him a delegation of 1,000 business leaders. That's a pretty big delegation by any measure. What do these two sides want from each other?
Well, I would say China-Australian relations, especially on the economic and trade side, are very close. And I think in the coming years and decades, it will become further strengthened, mainly because China, as the largest economy in the world, if we measure by purchasing power parity, and the second largest economy in the world, if we use official exchange rate to benchmark, will continue and remain the largest trading partner of Australia for decades to come. It depends on the wisdom and the ingenuity of both the Australian side as well as the Chinese side as to how to give greater premium to the prospect of economic and trade relations between the two countries. And I would say the Chinese demand for a variety of Australian goods and services, not only purely on the commodity and mineral side, will increase, and Chinese tourism definitely will become more and more welcomed in Australia. All these indicate that if China and Australia put their acts together, further engage with each other, then the potentials will surprise us on the upside.
Ambassador Brown, let's look at the relationship between New Zealand and China. New Zealand already exports agricultural products to China, dairy, meat, olive oil, things like that. You were part of that New Zealand delegation that went to China. How does your country now expect to expand that relationship with China?
Well, the scenario that James laid out from the Australian perspective is very similar to the way that we see things in New Zealand. We don't have iron ore, and our trade is not underpinned by a minerals trade. But across the range of products, and they go beyond agricultural products, that we are trading with China, we see the continued growth of the Chinese economy as offering a long-term, very secure and very profitable basis for New Zealand companies to engage in trade with that country, because China is now, not actually now our largest trading partner because of the collapse in the price of dairy products and of skim milk powder in particular. It's ducked slightly under the amount that we trade with Australia, but it is still on a par with Australia as one of our two largest trading partners, and we don't see that changing.
So, Rob, Australia signed a free trade agreement with China last year. New Zealand has had one since 2008. How do these agreements impact trade between all these countries? Is it just a case of dropping tariff barriers and taxes, or is there a lot more to it?
It has, for the most part, been about tariff barriers and taxes. It has not been so far much to do with behind-the-border barriers as yet, which are going to be taken down significantly in agreements like the TPP, etc. But there is some degree also of regulatory coherence, etc., between the two sides. So this it's not just limited to tariffs only. There's also some degree of harmonization and some degree of coherence in other areas, particularly when you have things like services trade. Tariffs really is not the primary impediment in that regard. It's about deferring regulations between countries, and it is to China's immense benefit to have trade with advanced service-supplying countries, because it can upgrade and upskill its own regulatory infrastructure in these areas, which still has some work to do.
James, as China moves away, it's made its intentions known. It wants to move away from an export-driven economy to a consumer-oriented one. What kind of opportunities does that present for Australian companies, and in which sectors are we likely to see the biggest growth?
Yeah, so the two big ones that people talk about in Australia are, first of all, premium agribusiness products, so premium food products. So we're seeing big jumps in Chinese demand for Australian wine, beef, dairy products, for example. And the other area is in the context of services. So we've traditionally sold a lot of education services and tourism services to China. Well, that's continuing to increase. And at the same time, there's also Chinese demand for financial services, health services, and these will be a bit different, because what they'll involve is Australian companies, instead of exporting them from an Australian base, they'll need to set up shop in China and sell them to the Chinese market from the Chinese base. So it's a new phase of the bilateral trade relationship.
Victor, I want to move now to another aspect of the relationship. This week, Australia awarded France a deal to supply submarines worth $40 billion. Let's take a listen to what the Australian Prime Minister Malcolm Turnbull had to say about the deal.
These submarines will be the most sophisticated naval vessels being built in the world. And they will be built here, in Australia. Built in Australia, with Australian jobs, Australian steel, Australian expertise. And this will secure our future security. And it secures, as does every lever of policy that we can engage, it secures our successful transition to the economy of the 21st century and the jobs which our children and grandchildren are entitled to expect.
So, Victor, what does China make of this deal?
Well, first of all, based on the fact that China-Australian relations are as good as we can expect, especially on the trade and economic side, from the Chinese perspective, we hope Australia will remain a force standing firmly for peace, rather than, adding to the side of potentials for war or conflict in this part of the world. The fact that Australia is going to acquire all these submarines at very, very expensive cost to the public is a concern for China. On the other hand, I think Australia and the United States have a pact of mutual defense, and Australia is more or less moving in tandem with the United States. Therefore, we urge that Australia will become a force of good offices between Washington and Beijing, rather than, siding with one side against the other. Because if China and U.S. relations get deteriorating in the coming years or decades, then Australia will need to make that very, very difficult choice of siding with one or the other. the better choice for Australia is to use all its wisdom and become a force advocating for peace and dialogue and diplomacy, rather than a force eventually engaging in war and conflict.
Ambassador Brown, do you think these countries have to make a choice? I mean, how does New Zealand look at this? Here's a country like New Zealand, Australia for that as well, for that matter. They've had traditional security relationships with the United Kingdom, with the United States. Do they now have to get into some kind of balancing act to balance Chinese economic importance against America's strategic significance?
Well, I think firstly, from a New Zealand perspective, we are in a different situation from Australia slightly. We don't have a security pact with the United States. We don't have any pretensions to being a distant water naval power. We do not have submarines, and we have a very limited naval capacity. But we do have a driving consideration in our diplomacy and in our defence policies, that we have no wish ever to find ourselves in a situation where we have to make the choice that Victor's talking about between China and the United States. We have strong relationships with both. We certainly want to work with both in terms of regional security, in terms of global security. We have bilateral military, defence, security, political, economic relationships of great importance with both China and the United States. And we don't see ourselves at any time in the immediate future looking to have to make a choice between one side or the other.
Right, and Sohrab, if we look at cooperation between all three countries, getting back to economic cooperation, of course, Australia and New Zealand excited at the prospect of having a market of 1.3 billion people open to them. But if we look at a sector like tourism, there are big advantages for all three countries, aren't they?
Enormous advantages, particularly with the outbound Chinese tourists. And there's this immense desire to go out and see the world, and they've managed to gain that sort of prosperity to be able to make their first trips abroad. A lot of them are going out, and of course you'd like to go to Paris and you want to go and see New York and all, but Australian cities, I have not been to New Zealand, but I've been to Australia, and Australian cities are beautiful. And particularly in Sydney, they will end up in Sydney and they will see more Asian Australians out there than they will probably see white Australians in Sydney, so they will feel so comfortable at home. This is going to be a huge revenue earner, and it'll also help them place China in perspective of the larger world. So I think this is a win-win game for both sides, totally.
Oh, at least you've made James smile there. James, Chinese investment in Australia grew 60% to $15 billion. In fact, according to the Guardian newspaper, Australia is now the second most favoured nation for Chinese investors after the United States. A lot of that money goes into real estate in Australia. What are the other sectors where the Chinese are investing in Australia?
Yeah, so there's been a big change over the last 5 years. You're quite correct. The Australian Foreign Investment Review Board said last year that we approved $50 billion worth of Chinese investment. That was double the approved investment from the US, so China is now a big investment partner for us. 5 years ago, most Chinese investors went into the resources sector. That's completely changed. As you say, real estate is now the most popular sector for Chinese investors. That's not just residential, that's commercial real estate as well. We also have enormous Chinese interest in our agricultural sector and in the services sector as well. So responding to all those Chinese tourists, for example, we now see a lot of Chinese property companies interested in building hotels and other tourist infrastructure in Australia. That's good for Australia. It creates Australian jobs. But it's also good for Chinese tourists because when they come to Australia, there's a lot more that we can offer them. So again, it's a win-win.